346%. That is the staggering year-over-year revenue jump just reported by Micron, and it's completely reshaping expectations for the entire global semiconductor sector.
Hello everyone, welcome back to AI Market News. Today we are looking at a pivotal moment for global markets. We'll be breaking down the latest US tech earnings, the ripple effects currently sweeping across Japanese markets, and the critical inflation data that could dictate the very next move for the yen.
According to current market information, Micron just delivered some truly historic fiscal third-quarter results. Revenue hit $41.5 billion, which was nearly $7 billion ahead of consensus. But what truly stands out for all of us tracking this is the gross margin expanding to 84.9%, with guidance for the fourth quarter projecting an even higher 86% on $50 billion in revenue. Now, to understand why this is so significant, we have to look at what drives these numbers. An 85% gross margin in a hardware manufacturing business is practically unheard of. It really only happens when a company achieves massive economies of scale, combined with absolute pricing power driven by overwhelming demand.
And that overwhelming demand? It's coming straight from the AI supercycle, specifically for high bandwidth memory, or HBM. For those of us newer to the space, here's the quick breakdown. HBM is structurally demanded by hyperscalers because traditional memory chips simply cannot feed data fast enough to advanced AI processors. So by stacking memory chips vertically, HBM acts as a massive, high-speed data highway. It completely eliminates bottlenecks, and it validates that the long-term AI capital expenditure cycle is not only structurally sound, but accelerating.
Naturally, this massive earnings beat sent immediate ripples straight into Asian markets. As you can see in the chart, the Nikkei surged over 2,000 points in early morning trade, touching 71,200 before settling just a bit. This incredible rally was led by Japan's own semiconductor champions, and it's really driven by the market realizing that AI memory demand is a confirmed, structural reality, rather than just some speculative narrative.
The technical setup in Japan also perfectly supported this rally. Analysts noted that the 25-day moving average deviation had recently dropped back below the 5% overbought threshold. The reason this matters for us is pretty straightforward. When a market cools off and drops below this specific technical threshold, it removes the immediate risk of a pullback. That gives institutional buyers the technical room and, frankly, the confidence they need to step back in aggressively.
Shifting our focus to the United States, broader U.S. equity markets are stabilizing after a recent tech-led sell-off. As the graph shows, the SOX index, which tracks major semiconductor companies and had actually fallen nearly 8% in anticipation of this earnings print, is now set for a very meaningful recovery based on these validated demand metrics.
The read-through here is incredibly positive for all of us tracking US tech beneficiaries. Micron's results essentially prove that AI spending isn't slowing down, it is accelerating. This creates a rising tide that benefits the entire semiconductor supply chain. It secures the growth narratives for heavyweights like NVIDIA and AMD, who literally rely on these exact memory components to build their massive AI data center systems.
But technology earnings are really only one half of today's market equation. We also have some absolutely critical macroeconomic data arriving. Consensus expects the headline PCE to accelerate to 4.1% year over year. However, the more crucial number for all of us to watch is the core PCE, which is expected to tick up to 3.5%. The Federal Reserve actually prefers the core PCE because it strips out highly volatile food and energy prices, which gives us a much clearer look at the true underlying inflation trend of the broader economy. If this core PCE prints hot, meaning it comes in above that 3.5% expectation, it's going to have immediate implications for interest rates. A hot inflation print basically signals that the economy hasn't sufficiently cooled down. That means Fed Chair Jerome Powell will likely be forced to keep borrowing costs high to suppress demand, essentially cementing a September rate increase. And this brings us directly to the currency markets, which, as we know, are hypersensitive to these exact interest rate dynamics. As you can see in the chart, the USDJPY remains tightly coiled in the 161.50 to 161.76 range. Right above this sits the critical 162.00 barrier, which is a level that carries intense technical and political weight.
So why is the 16200 level so heavily watched right now? Well, crossing this threshold triggers immediate intervention speculation, because authorities will often step in to buy the yen, aiming to prevent it from weakening too rapidly and destabilizing the local economy. On the US side, if that PCE data comes in hot, higher US yields will attract more global capital.
That pushes the value of the dollar even higher compared to the yen, potentially forcing a real showdown at this 162 barrier. Conversely, a tame inflation print could see the pair naturally retreat back toward 160.55.
Before we wrap up today's explainer, let's reference the economic calendar so we are all completely prepared. The definitive catalyst for these market moves, the May PCE data, drops this morning at precisely 8:30 a.m. ET. This single data point will likely decide whether the AI-driven market rally extends or if renewed rate hike fears end up taking over. As the data rolls in, we really have to ask ourselves, will the seemingly unstoppable momentum of the AI supercycle be enough to outpace the Fed's ongoing fight against inflation? We'll find out soon enough. Thanks for watching. Please subscribe and hit the like button. This video is automatically generated by NotebookLM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.